Good afternoon, everyone. I want to do a video on, I will call this video Hero versus Zero. I was driving this morning to do some errands and happened to put the Ric Edelman show on the radio. And of course, Rick was on there doing what he usually does. He advises people to go long pieces of paper, and he was bashing silver and gold. Rick is a notorious basher of silver and gold. He has been. He's been wrong for the last 10 years straight. So I want to let him explain himself in his own words. Got an article here. This is Ric Edelman's The Truth About Gold, What the Pundits Aren't Telling You. Many are hyping gold as the must-have investment of the day, with promoters regularly saying that gold is a profitable investment that hedges against inflation while protecting against a declining dollar. Sounds great. Too bad the hype is wrong. Wow. He's really going to have to pull a rabbit out of the hat on this one. Let's see how he does it. The truth is that gold is a speculative investment, one whose returns are not guaranteed. Okay, what investment does have guaranteed returns? Wow, I can't believe he just said that. This guy is a joke. What a joke. Anyway, one whose returns are not guaranteed. Consider the last time we encountered a gold rush in the late 1970s and early 80s. At the time, inflation was rampant. The government had bailed out Chrysler with a $1.5 billion loan, and investors were flocking to gold while the media egged them on, pushing the price up to a then record of $850 an ounce, according to the New York Mercantile Exchange. Remind you of any behavior you've been seeing lately? At the time, gold seemed like a can't-miss investment. So, Mr. Edelman here, you see he's picking the top. He's picking for you to buy at the very top. But like all investment fads, the run-up in gold prices didn't last. After prices peaked in January 1980, prices then dropped 235 months. That's a bear market of almost 20 years. Finally bottoming out at $252 in July of 1999. It took another 7.5 years for prices to reach their January 1980 high. Can you imagine waiting 27 years to recoup your initial investment? Well, Mr. Edelman, actually, people who invested in stocks, a lot of them waited a lot longer than that. If they would have taken your advice, Mr. Edelman, and bought some of the common stocks that have gone bankrupt, how long would they have had to wait to recoup their investment? What a tool. Next, he says, making the situation worse is the fact that gold pays no dividends. Okay, do any of the stocks that you know of pay dividends? Did any of the NASDAQ stocks pay dividends? No, of course not. Interest or income? Interest. Okay, what pays interest right now? Treasuries at 0.5%, 0.25%? Oh, wow, this guy. Stocks can split, turning one share into two shares, but gold never does. What a clown. This guy. Is this guy a joke? Stock split. So when a stock splits, that's magic. You've got twice as much money. Oh boy, wow. People really follow this guy. That's what's incredible. Thus, over a 20-year period, there was utterly no gain whatsoever to be had. Worse, some people had to pay fees to store the stuff. But doesn't gold help you keep up with inflation? Not necessarily. Consider this. From January 1st, 1979, notice he picked the top, through December 31st, 1984, consumer price index rose 7.6% annually, but gold prices only rose 4.1% each year. Meanwhile, the S&P stock index rose 15.4% annually. So he picks the initial bull run in the stock market and coincides with the bear market of gold. Wow, this guy. Okay, if gold isn't certain to protect against inflation or provide any sort of guaranteed return, will it protect you against a weak dollar? Again, not necessarily. Gold and the dollar are not negatively correlated, meaning one does not rise merely because the other falls. In fact, over the past 40 years, gold moved in the opposite direction of the dollar only 20% of the time, according to Oppenheimer and Company. That's hardly a sure bet. For instance, from December 31st, 1987 through September 1st, 1992, the dollar declined 83%, according to Bloomberg. If you had bought gold as protection, you'd have been hurt, not helped over that same period. This, again, is just monkeying with statistics and time periods. This is not to say that gold doesn't have a place in your portfolio. It's just that the metal should comprise only a small part of it, along with other natural resources. Consider the S&P North American Natural Resource Sector Index, which tracks oil and gas, blah, 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 blah. That last category tracks gold as a commodity, and just as importantly, it tracks companies that mine gold. See, I'll tell you, gold miners are more important. If you're gonna buy gold, you should buy gold mining stocks, of course, so that Mr. Edelman here can get a cut. Because if you buy physical gold, then Mr. Edelman here doesn't get a cut. But if you buy paper assets, Mr. Edelman gets his wonderful percentage. So, big surprise. They don't just excavate gold, they also extract silver, platinum, nickel, copper, iron ore, meaning they diversify their operations to hedge against fluctuating commodity prices, just like you should be doing. Again, he says fluctuating. Okay, so there's no inflation. There's just fluctuating. Okay. And believe it or not, as of October 31st, 2009, the NANRS index was outperforming gold for the year, up 28%. Oh, so he picked a 1 year where you can find some index that beat gold. The message here is not to load up on natural resources, for that would be just as speculative as loading up on gold itself. Rather, the better approach for protecting against inflation and falling dollar is to invest in a broadly diversified portfolio. So, Mr. Edelman here can get his percentage. Yes, okay, so this is hero versus zero. This guy is a complete zero. Just despicable human being. And Jimmy Rogers is a hero. Now let's listen to somebody who actually invests his own money for a living. In other words, he makes money by being right, not by scamming fees from people, but by being right. Mr. Rogers says, of course he's talking about the stupidity of America's military. The Daily Bell asked him, what about the wars America is persecuting in its military stance generally? Affordable? Supportable? Jim Rogers, well, it's certainly not affordable. America's got troops in over 100 countries, and it's just making enemies and not helping America's standing in the world. As for supportable, of course not. How can anybody justify America now getting involved in Libya? I mean, if America is going to support opposition to everybody in the world we don't like, America is soon going to be totally bankrupt, even more bankrupt. He goes on about Yemen. He's going to talk a little bit about silver here, and he talks about China. They ask him, Daily Bell, where is gold-headed silver? Jim Rogers, everything I have told the world about gold and silver is going to continue to happen. Eventually, gold will be a couple of $1,000s an ounce and pretty much higher, probably much higher, as currencies become more debased. Who knows how high? Silver will definitely reach new highs. As I have said, the US dollar is in serious trouble and will be debased a great deal in the future, and eventually will be problematical itself. So gold and silver will be measured by the US dollar, but I hope there will still be some sound currencies no matter what happens. And he talks a little bit about inflation. They ask him, you told us last time that the West was not handling the economic crisis, which began in 2008, very well. Are you more or less optimistic now, Jim Rogers? The situation continues to be bleak, in the U.S. especially. The politicians continue to dole out staggering amounts of money, and people who receive that money think they're better off. But the overall situation is worse. America's debt continues to skyrocket. The money train continues at a high rate, leading to more inflation and higher prices, and to eventually more currency turmoil and eventually higher interest rates. Somebody is going to have to take some losses, just as in Europe. The idea that the solution for too much debt and consumption is more debt and more consumption is ludicrous. It's embarrassing. Maybe the Europeans are starting to understand it, and maybe they're going to do something about it, or be forced to do something about it, which is more likely. In Portugal, they are saying they're not going to cut spending. Well, eventually somebody is going to have to face reality. In China, they realize they have an inflation problem and are trying to do something about it. Let's hope they do. They still have a blocked currency, which in my view is part of the problem, but to their credit, they do continue to open the currency more and more every month, every quarter. They know they have to. And he talks about India, inflation, and Bernanke. Ask him about inflation. He says it's already happening. Prices are going higher. Now the blame game starts, and the government will blame it on drought or crop failure or whatever. Politicians will do and say anything to avoid explaining that inflation is a monetary problem. The reactions are always the same, and it's always astonishing to me. As President Ford said, there is no problem. And even if there is, it's not his problem. Well, there are always people who are in denial. Then the problem gets worse and not better. And he goes on and on about Bernanke. He's pretty open in this. Jim Rogers is amazing. Amazing investor. He is a self-made billionaire through investment decisions. This is a hero. This is the man you should be listening to. This man is a zero. He's made all of his money by advising old ladies to buy crooked Wall Street scams. Crooked Wall Street stocks, crooked Wall Street bonds, annuities, which, by the way, all the people who followed his advice, by all rights, should have been completely wiped out in the fall of 2008, except for the fact that people like him and the Congress and all the rest of these shysters rammed through a $10 trillion debt onto the children of this country so that they would have to pay for the suckers who followed this man's advice and who would be penniless and bankrupt right now, except for the fact that the government printed up a bunch of money to bail out him and his investors. So, again, just despicable, zero and hero. And we'll talk to you next time.